Hello, I'm Pat O'Hare, Chief Market Analyst for Briefing.com. Today is Wednesday, April 2nd. We can see tomorrow's newspaper headlines today. Fed Chairman says economy could contract in first half of 2008. It is true that the Fed Chairman said that very thing in his prepared testimony on the economy before the Joint Economic Committee on Wednesday. It is a departure, admittedly, from the November testimony when Bernanke noted growth was seen as remaining sluggish during the first part of next year. Like most language that originates from a Fed chairman, the subtle change will be talked about ad nauseum and most likely billed as a clarion call that the economy is destined for a recession. The point that will be missed is the conditional nature of the statement. The Fed chairman's view that the economy could even contract slightly in the first half of 2008 is much different from saying it will contract slightly. In the same vein, it is possible one could get hit by a car soon, but it is by no means a certainty. In light of the stress in the financial markets the Fed has had to address and evidence in the data that economic growth has slowed appreciably, the chairman of the Federal Reserve would have no other choice but to acknowledge real GDP could contract slightly. He must do that to preserve his credibility in the event that negative growth comes to fruition. At this juncture, Briefing.com does not see GDP receding in either the first or second quarter. Taking into account the various components that factor into GDP calculations, we see the economy trending near 1% growth. In our estimation, the monetary and fiscal stimulus will halt the downtrend before there is a single quarter of negative GDP. Our view isn't the popular view, yet it is one that is supported by the math which we explained in a recent Big Picture article. More important in Bernanke's testimony today was his expectation that economic activity will strengthen in the second half of the year, due in part to the stimulative effects of monetary and fiscal policies. He went on to add that growth is expected to proceed at or a little above its sustainable pace in 2009, bolstered by a stabilization of housing activity, albeit at low levels, and gradually improving financial conditions. The caveat with the Fed's outlook is that risks to the forecast remain to the downside due to the turbulence in the financial markets. However, the innovative actions the Fed has taken to mitigate the turbulence should not be overlooked either. The Fed chairman has taken an understandably conservative approach in discussing the economy and the economic outlook. He recognizes, as do we, that growth has slowed noticeably, but like us, he is also pointing to the supportive aspect of export growth, the beneficial nature of current monetary and fiscal policies, the likelihood inflation will moderate in coming quarters, and confidence in the economy's long-term prospects. Clearly, the economy is in a very difficult period right now, as Bernanke asserted in today's testimony. No matter what you read in the papers, though, Bernanke, like us, is not trumpeting a recession call either. I'm Pat O'Hare for Briefing.com. Thanks for listening.